Welcome back to Alpha Recap, your quick take on the market day. Today we're unpacking a risk-on rally that saw small caps take the lead, energy ease, and tech hold its ground. As always, if you have questions, you can reach us at stockalpha.ai. So, what really stands out here is...
Thanks. Great to be here. I mean, when you step back and look at this, it was a pretty clean risk-on session. The headlines that had been making traders nervous cooled off. Oil pulled back, and that let cyclicals and smaller names run.
Walk me through the big numbers. How did the indexes finish?
The markets closed up across the board. And the number that really caught our eye? The S&P 500 finished up about 1%. The Nasdaq 100 finished just over 1%. And the Russell 2000 jumped a bit over 2%.
Big move!
Exactly. That outperformance in small caps, the Russell 2000 leading by a noticeable margin, was the headline. It pointed to improving breadth and a renewed appetite for idiosyncratic or cyclical risk rather than just sheltering in mega-cap defensives.
So, why did risk appetite return today? Was it mostly geopolitics or oil?
It was a mix. The immediate military strike risk eased. President Trump paused strikes on Iranian energy sites, and oil prices came off after a run-up. That undercut the near-term inflation scare that had been weighing on sentiment. So cyclicals and small caps benefited from both the calmer geopolitical tone and the falling crude.
Not a great day for energy then.
Right. Energy was mixed to soft. The pullback in oil constrained upside across big energy names, and that kept the sector from being a top performer even on a broad market rally.
Right. And the other thing is, how did the sector map look beyond energy?
It was a classic risk-on footprint. Materials and industrials outperformed, as small-cap industrials and some mining names benefited from improving base demand and M&A chatter. Financials, especially regional banks and asset managers, participated as the Russell strength lifted those groups. Technology and communications held their ground with software and AI-related stories drawing interest. Utilities saw selective strength on grid and storage investment narratives, while real estate was mixed as investors parsed rate sensitivity versus property-specific news.
Yeah, that tracks.
And consumer and media names saw some M&A and content-driven flows. So it wasn't a one-sector bounce. It was fairly broad, which mattered for momentum-based strategies.
Let's talk about the individual names that moved the tape. Anything that stood out?
A few story stocks drew outsized attention. Tesla stayed a trending ticker, with momentum traders rotating back in. Alphabet benefited from ad recovery and AI narratives. Synopsys and other software or electronic design automation players saw renewed interest on the AI tooling and M&A speculation front. Pfizer jumped after news about seeking approval for a Lyme vaccine with a partner in France. And small-cap biotech filings, we saw a few 8Ks from names like Pyxis Oncology and others, often spark headline-driven spikes that boost the Russell on days like this.
The 8K frenzy never gets old.
Exactly. Filings and single-stock catalysts can outsizedly influence index performance, especially when breadth is improving and flows are concentrated in smaller names.
Okay, shifting gears. What did this all mean for the macro and the Fed story? Any implications?
Two dynamics mattered. One, the drop in oil eased a near-term upside risk to inflation readings, so that reduced the argument for an immediate hawkish pivot from the Fed. Two, headlines about threats to U.S. Treasury buyers put a spotlight on fixed income flows. If foreign demand for treasuries were to drop meaningfully, that would lift yields and complicate things for rate-sensitive assets. So the market signaled that the immediate inflation scare softened, but structural risks around treasury demand remained a watch item. Analysts noted that data ultimately drive Fed decisions, but the central bank would be mindful of dislocations in the treasury market and how oil-driven CPI dynamics evolved.
On the technical side, you mentioned breadth. What was the market structure read?
Internals improved. Small cap leadership ahead of the S&P and Nasdaq gains is a positive short-term technical sign. Momentum indicators showed renewed buying interest, and option flow patterns had bullish skew towards cyclicals and some tech names. But the tape remains sensitive to quick reversals on geopolitical headlines and treasury flow risks, so any continued expansion of breadth would be an important confirmation.
Not what anyone expected.
Honestly, I was a bit surprised by this one. The combination of a pause on strikes and profit-taking in oil created exactly the environment where smaller, more cyclical names could outperform, at least for the session.
What should listeners be watching heading into the next session?
Keep an eye on 4 things. Follow up geopolitical headlines on Iran and energy. Moves in crude and whether oil weakness persists. Treasury demand and any signs of tighter or looser liquidity in bond markets. And company-specific catalysts like earnings, filings, and any biotech or regulatory news. If the S&P and Nasdaq build on the day's gains with expanding breadth, the short-term technical path would likely stay constructive. But headline risk can change that quickly.
Quick risk checklist. Hit me.
Geopolitical escalation, a rebound in oil pushing inflation expectations higher, a meaningful drop-off in foreign treasury demand lifting yields, and micro-catalysts in small and mid-cap names that can skew index action.
So, final takeaways for listeners.
Today closed as a constructive, breadth-improving rally led by small caps. The S&P finished up about 1%, the Nasdaq 100 finished just over 1%, and the Russell 2000 jumped a bit over 2%. That reflected reduced immediate military strike risk, a pullback in oil that eased near-term inflation worries, and rotation into cyclical and small-cap exposures. Analysts note that while momentum favored a short-term bullish posture, headline-driven volatility and treasury flow dynamics remained important risks.
Great. And a quick reminder, this is informational market analysis, not investment advice. We're talking trends and data, not telling anyone to buy or sell specific stocks.
Right. Objective takeaways only. The market showed improving breadth today, but structural questions around treasuries and geopolitics kept risk elevated.
That's our alpha recap for today. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening. We'll see you next time.